Welcome to the presentation of the software Corporate Planner, and I will guide you through the module of financial controlling that's available within this software. We'll start with this module, and when I open the module, what I see is the planning table. At the bottom part of the screen, we have the planning table with the figures, and in the upper part of the screen we have a tree which shows us where we currently are. Right now we have the profit and loss account open, and if I want to open balance sheet, I can just click on balance sheet and have the balance sheet in the table below. If I go back to profit and loss account, I see the profit and loss in the table below. Right now what I see is the overall profit for the company, and if I want to do a drill down, I can use the tree above and go into more details. I see what profit consists of. It's profit before tax and income taxes, and if I want to do a further drill down, I can go and do the drill down in the tree. Also, I can do the drill down within the table, and if I go here, I can see the more detailed figures and see what these positions consist of. Also, what we need to know at this point is that right now I'm looking at the figures for January till December 2020, and if I want to change the time span for this table, I can just use this slider, and for instance, if I want to see just January till June, I can see January till June 2020, and right now I only have months from January till June, and in the time span result I have these months. If I want to change the period, I can use this time slider and move it right or left, or use whichever period I want to see. Right now we're looking at May to October 2020, which is exactly what's in the table. I will go back to January till December 2020, and also something else that's important to note right here is that right now we're looking at a budgeted figures that are in the software. If I open this drill down menu, what we see is that we have different sets of data or different data streams. Right now we're looking at a budget, but there are other data streams that are available in this database. They are actual, forecast, simulation, plan 1, plan 2, plan 3, plan 4, and so on. We can create as many data streams as we want, and in this presentation I will show you how we will work with different data streams. Each data stream is a separate set of data, and you can make these streams as many as you want and change the data that's within them. Right now we're looking at budget. That's our data stream where we're going to plan the values. Also, I can choose which company I'm looking at, and here in the drill down menu I can choose the company and structural units within the company. Here we have different structural units or cost centers within this company, which are different pharmacies within the company. If I want to have more than one company within my group, I can also create more companies in the software. I will just show you now which companies are created in this example. So if I go to group, I can open the whole group and see all the companies that exist within this group. If I have some additional companies, I can create more companies. If I have this group, I can see the figures for the whole group. As well as that, I can reorganize these companies and make different groupings within the whole group. So if I open another grouping, for instance, I open divisions, I can see the same companies grouped by divisions. So I have this Phoenix Pharma division, venue division, and marketing service division. I can group them in as many ways as I want to. So if I open another grouping, which is regions, I see the companies grouped by regions. So I see companies that were registered in Serbia, Bosnia and Herzegovina, Montenegro, and Macedonia. So I can integrate the figures for different companies within the group in the same database, in the same software. As well as that, within one company, I can have as many cost centers or structural units as I want to. So if I go to structural units, I can organize the structural units within one company. I will open the Phoenix Pharma Serbia company, where I have a list of cost centers that are within this company. Also, I can group these cost centers in a way that I want. So if I open another preview, I can group them. For instance, I can list all the pharmacies that are available within this company, or I can group them in a different way. For instance, if I open regions, I can see how these cost centers are grouped by regions. And of course, I create all these groupings on my own in a way that is useful for me and for my company. In order to make plans and to make budgeted figures, we need, of course, to have some actual figures from the previous years as a reference. So the first step that I will show you is how to connect your actual figures from your ERP system to the corporate planner. I will go to import data and I will show you the import definition. When we create an import definition, we can import data from any database, whether it's an Excel database or any other type of database, such as SQL database, or any ERP systems such as SAP, Microsoft Navision, and other ERP systems. So I will show you how this database was created. It was created from a database in Excel, and the Excel database was extracted from an ERP system. The database that we use, I will just show you in Excel what it looks like. It's a regular Excel database that has some columns that we're going to use. For instance, this date column, we will use the cost center name, account, name of the account, and we also have the debit and credit figures in this database. I will connect this database to Corporate Planner, and then we will use these actual figures in order to make planned values. I will go back to the software and I will show you how this database was connected. When I create a connection, I define the name of the database that I'm connecting it with, and also I define the table that I'm connecting it to. I choose what I want to import, and in this case we're importing both structural units or cost centers, different accounts, and the data that is within these accounts. Also, we are adjusting the names of structural units and accounts. If in the future the names within our actual database change, then the names of the accounts and structural units will change in CP as well. I select the rows that I want to import. For instance, here I do not import the first row as the data is not there. And then I choose the company that I'm doing the import definition for, choose where the structural units are in my database. Here we have cost centers in column D, which is what I define here, and also we have the names in column E, which is what I define here. I also define where the accounts are. I connect the column F with the account number, here, and also the name of the account number in column G. Also, I select where my data is, which is the columns H and I, where I have the debit and credit figures that I'm going to import. After that, I defined if I need to change the prefix for my numbers. For instance, if we have numbers in a format where revenues are negative costs, or where revenues are with a minus sign, in that case I will choose this adjustment. After that, I choose the data stream where I'm going to import this data, and in this case, as we are importing actual data, I'm choosing the actual data stream. As well as that, I need to define where the date is located. So here in this database we have the date in column B, which is what I specified here, and also I specified in which order the date was made. For instance, if it was day, month, year, or maybe it was month, day, year. As well as that, I do not have to import all the data. I can do some filters on data. For instance, if I do not want to import the whole trial balance, I want to import just P&L, then I will do the filter here and specify only accounts that are within P&L. And this is how we create a connection with the database. I've showed you the Excel database that we connected it to, and in this way you can create a connection to any other kind of database. After we have created a connection with a database, every time we want to update this connection, we can just execute the import definition, and the updated figures will be available within CP. When I've imported the data, I go to my planning table, and right now, if I open actual, what I see is the actual figures that were imported through the definition that we had created before. If I do a further drill down, I can go to the account level and see what this line gross turnover service fee consists of. So we see 4 different accounts, which when added up give the figure for the gross turnover service fee. These values for the single accounts were exactly the values that we imported through the import definition. But how is this structure of the account created? I will show you the chart of accounts. So in the corporate planner, we create the chart of accounts for our companies, and we define the structure of both P&L, balance sheet, and cash flow statement. So I will open the profit and loss account statement, and what we see here is how the structure of this statement was created. For instance, we can see that turnover consists of gross turnover trading, gross turnover service fee, and gross turnover leasing. And if I want to add another field under this one, I can just go and create a new field, and then I can put the accounts there. If I open any of these, if I do a further drill down, I can rearrange these accounts and put them in any other field where I want to. So this is how I organize my P&L and balance sheet structure. I can have these structures as many as I want, and right now we're looking at a local chart of account for each company. I can have a different structure for my group. So if I open the group chart of accounts, what I see here are the group accounts, different accounts from those accounts that we saw before for a local company, and also we see the structure of the whole P&L for the group. I can connect the single company chart of accounts to the group chart of accounts by connecting the single accounts from a single company to the group account, the group accounts. So if I go to chart of accounts mapping, what I see here is how different single company accounts are connected to the group company accounts, and then I can look at the figures from one company from the single company accounts, and I can see them in the group company accounts as well. Let us go back to planning. I'll go back to the planning table, and I will start creating the budget for the next year from the forecast for this year. The steps that we are going through are the following. We have imported the actual figures for the 2020, and right now we need to create a forecast for 2020 in order to have a base for the plan for 2021. After we create a plan for 2021 as a forecast plus a certain percent, then we will do the fine-tuning of the plan for 2021. In the end, we will see the variances and do a variance analysis. So our next step is the forecast for 2020. If we look at the way the forecast is created, it's usually actual figures for the first 9 months, and then we add the planned figures for the following 3 months. So let us go to Corporate Planner and do exactly the same for this forecast. Right now we see the actual figures for 2020, and we have the figures from January till June. So we will use these figures for the forecast, and for the period of August till December we will use the budgeted figures. So I will open the stream forecast where we currently don't have any data, and I will copy the actual and the budgeted data into this stream. So I will use the functionality planning across data stream, and first I will select the period from January till July 2020, and I will select the actual figures that I'm going to copy from this period. Then I will say I want to copy these figures to forecast, and also these are imported values, so I'm selecting the imported values. I will use the factor 1, which means that I'm copying figures exactly the way they are. If I use any other factor, for instance 1.1, then I will see all the figures multiplied by 110% or 1.1. I'll copy the whole company into the forecast, and when I go to copy, what I see right now is the profit and loss for this company exactly the same as actual. Right now we're looking at a forecast. Also I have the whole balance sheet copied the way it was in the actual. After this, I need to add the figures for the following months, for August till December, and I will use the budgeted figures for this. So I will repeat the same process. This time I will copy for August till December. So I'm selecting August till December, copying to the same period, and I'm copying from the budget to forecast. This time these are planned values, not imported values, and I'm copying them as planned values. I'll copy the profit and loss account. When I go copy, what I see right now is that I got the figures for August till December in the forecast. These figures are exactly the same as the figures that we had in budget for this period, for August till December. So after I've made a first draft of my forecast as a combination of actual and budget, I can do fine-tuning of this forecast. We will do fine-tuning for the period August till December, as it doesn't make sense to adjust the figures for January till August since they've already happened. So I will change the time span. I don't want to see January till December anymore. I want to see only August till December, because this is the future. So I will start by editing the figures that we have here. I will start with sales and I will open the turnover. So what we see here is the planned turnover for this period. So if I go here, gross turnover trading, and I see the figure of 217 million. If I have information that this figure will not be like this, it will be 220 million, I can go here and enter 220 M. Right now the figure has updated, and also the turnover for this whole month has updated as well. If I don't want to plan on this level of details, if I want to plan the whole turnover for August, I can say that the whole turnover for August I'm planning to be 240 million. So I will open here and say 240 million. And right now what has happened is that all the figures below have updated. They have remembered their previous distribution, so they have just added the same percentage to each of these figures. As well as that, if I don't want to plan on the monthly basis, but I want to plan some line for the whole period, I can go here and say, for instance, the time span result, the result for this August till December won't be 1.18 billion, it will be 1.185 billion. So I can just say 1185 M, and right now all the figures have updated and they have remembered the distribution that they had before. If I open one of these lines and do a further drill down, what we see here is that if I change a number on this line, for instance, we had here 198 million. If I say 200 million, all the lines below are updating as well, and they are still remembering the distribution that they used to have. Which means that you can plan on any level of details that you want. If you want to plan the turnover on as just one line without going into further details, you can just plan here the turnover and say, for instance, 241 million. If you want to do a more detailed planning for a certain line, you can go to that line and do a more detailed planning there. After we have adjusted the forecast, the next step is to create a budget for the next year. So if we look at the whole period, January till December, we have the whole forecast for this company. And if I go to profit and loss account, we see the final result that was projected in this forecast. I will use this forecast as a basis for the next year's budget. So once again, I will copy the data across data stream, and this time I will copy the data from January, December 2020 from forecast, and I will copy it to January, December 2021 and use them as budget. I will select both imported and planned values, copy them as planned values, and again, once again I will use the factor 1, which means I will copy the same figures into the next year's budget. After that, we will see how we copy with different factors. For instance, if I want to increase sales by 5%, how I'm going to do that with this functionality. So I'm copying the whole profit and loss account. I will click on copy. And if I open the budget, change the period. Right now we are in January till December 2020. And if I go to January, December 2021, right here I have the same figures that we had in the forecast. So the next task is to change this budget, to do the fine-tuning of this budget. What we've just done is we've created a forecast and copied the forecast into next year's budget. After that, we're going to adjust next year's budget by saying that we want to increase sales by 10%. How are we going to do that? I'm going back to software and I'm opening the turnover which I want to increase by 10%. Right now I'm looking at a turnover and I will copy this turnover to itself with a factor of 10%. Once again, I will copy across data stream and I will choose the same period, January to December 2021. I will copy it to itself and I will copy the same stream budget to budget to itself. I'm copying just the turnover and right now I'm using the factor 1.1. If we look here, what we have right now is 2.766 billion. And if I do this copy, we have the updated figure for this budget. And once again, I can do the fine-tuning within this new budget. So if I want to change gross turnover trading not to be 228 million but to be 230 million, I can do 230 million here and have the new budgeted figure. As well as that, I can do this for the whole turnover in January and say, for instance, it won't be 243 million, it will be 245 million. And I can just enter 245. The additional turnover was spread to the lines that were below in accordance to the existing distribution. As well as that, if I do a further drill down here and see what this figure consists of, I can see the different accounts. But if I open up one of these accounts and do a further drill down, what I see here is the whole figure of 230 million, what it consists of when we look at different cost centers. So if I say this figure will be 240 million instead, what we see here is that each cost center has updated the value and the cost centers have remembered the distribution that we used to have. If I want to plan on the cost center level, I can open any of these cost centers. And for instance, if I open this cost center number 7, what I see here are the figures for the cost center number 7. And if I say that the turnover in January for this cost center will be 40 million, this figure will spread across the different lines and this figure will update the figures that we had for the whole company. As well as that, I can plan for the whole year and say that gross turnover trading for this cost center won't be 126 million, it will be 130 million. And these 130 million have spread across the months according to the distributions that we used to have. So we didn't have to take care of the distribution, the software did that for us. As well as that, the whole time span result for the turnover has updated, and if I change this value here as well, and I say, for instance, this will be 140 million, I once again get the updated figures for this cost center number 7 and for the turnover in each line, for each account, and for each month. When I plan the costs, I can go to operating expenses and see how the costs were planned. So if I want to see the costs sorted by the biggest figure, I can just sort them by the result and see that the personnel expenses are the highest figure. Also, I will choose to see the whole company. So right now I'm looking at the operating expenses for the whole company. And if I want to reduce these expenses, I can go planning across data stream and copy this budget to itself with a factor of, for instance, if I want to reduce them by 3%, I will say factor of 0.97. I'll go copy, and just remember the figure that we used to have, 700 million. If I copy this, I will get 682 million. So right now I have this as a rough draft of my new budgeted figures, and once again I can go and edit these figures. I can see them by different cost centers. So if I open the cost center number 7 that we looked at before, I see the new budgeted figures for this cost center. And right now we can do the planning for the cost center and say, for instance, that personnel expenses in January will be not 1,300,000, they will be 1,250,000. So we get the new figures here. A more detailed planning of the costs can be done in another CP module, which is called operational controlling, and the more detailed planning of sales figures is done in the sales controlling module. If I want here in financial controlling to see how I have planned the costs for each of the cost center, I can open another view and see the organization view, and I will just select the view that I want to see. I want to see all the pharmacies, and right now I see the operating expenses by each of these pharmacies. So I can plan in this table as well. At the beginning, I see the result for all the pharmacies, and also I see what they look like pharmacy by pharmacy. If I want to see the overall result that I have planned for my company, I can go to profit and loss and see the profit that we have planned. So I can do a further drill down here to see more detailed figures. And I see pharmacy by pharmacy how I have planned a P&L. Need to use this table for some other purposes. I can export it to Excel. And when I click on Excel, right now I have the sheet where I have exactly the same figures that I had in Corporate Planner exported to Excel. And right now I can just edit something here and send this to my colleagues or create a report in Excel. Moreover, if I'm interested to see just certain figures from the statements, what I can do is create a whole blank table and just add the figures that I want. So I will create an empty worksheet, and right now I don't have anything in my table, and I will add the figures that I want to see. For instance, I will add turnover, I will add the ebitda, and I will add one key ratio that I have created, which is ebitda in percentage. So right now I see what is my turnover, what's my ebitda, and I see what's my ebitda in percent. And I can use this table to make my planning easier. For instance, if I say here right now 300 million, I can see the impact that it has on my ebitda and my ebitda in percent. While we were planning P&L, the logic behind that was set up in software has planned the balance sheet. So if I go to balance sheet right now and open a new view, what we see here is that balance sheet has been planned. So if I open short-term assets receivables, for instance, we can see the different accounts that this line consists of. So if I open to see how certain of these accounts were planned, we can see that they have brought some values from the P&L statement. So we have set up a logic in the P&L statement that connects these lines in the balance sheet with the P&L changes. We can do a more detailed planning within the balance sheet, and also we can do the planning of different investments and planning of new credits or new loans. As well as that, cash flow statement was generated based on the P&L and balance sheet that we have planned. So we set up at the beginning the structure of the P&L statement, and right now if I open, we can see the structure that I have created, which is cash flow from operations, from investing activities, and from financing activities. And if I open the cash flow from operating activities, for instance, we can see that I have made it in a way that we first connected to profit, added back depreciation, and then adjusted for the changing in short-term assets and short-term liabilities. Which means that once we plan the P&L and set up the logic for the balance sheet, we have the whole P&L, balance sheet, and cash flow statements ready. After I've finished planning, I can go and see what the variances are, or the final step in the whole planning process, which is variance analysis. So I'll see how my budget looks like compared to the forecast of the previous year. I'll go back to profit and loss, and I will open another view. Right now I will look at a stream view where I can see the budget and actual compared. So right now I don't want to see budget and actual, I want to see budget and forecast. So I will just change this row, not to be actual but to be forecast, and I will offset it by 1 year so that I see the forecast for the previous year. As well as that, I will edit the forecast in other rows as well, and I will just rotate these. Okay, so what we see here is what the overall profit looks like based on what we have planned. So if we open, for instance, turnover, we can see that we have increased the turnover overall for 12%. If we look at the months, for January we have increased it for 36%, February 10%, March 10%, and so on. We see the new figures for and differences for each of the months. If we go to operating expenses, for instance, we see that operating expenses are minus 3% this year because we have planned them that way. Instead of rows, I can see this in columns as well, so I can open another view. I will open the column view right now, and I will also set up this to be forecast for the previous year. And right now we will see the comparison of the budget and the forecast for the previous year and see by each type of cost how we have different variances. This is for the cost right now. If I open, for instance, turnover that we have planned here, we can see the budget and the forecast, the differences that we have here. If I want to see how I plan the turnover for different cost centers, I will just open the organization view, and right now I see how the turnover was planned for each of the cost centers. If I want to save any of these tables, I can save them and use them later, and I can save the table, create a name for this table. For instance, I will call it turnover by cost centers, and I can also select if this table can be used for other companies or just for this one company that I have here. If I change something and open another table, for instance, if I change the table here, want to open my old table again, I have it here saved, and I can open this turnover by cost center just by clicking here. As well as that, I can open all the tables that I have saved in the web browser or in web client, and here in web client I see all the databases that I have created. If I open one of these databases, in each databases I have different tables. So if I open one of the tables here, for instance this one, variance analysis, I can see the figures here, and I can also edit the figures here, enter new values, and use this web browser as a tool to access the corporate planner. As well as that, in the web client, I have one section where I have dashboards. Of these dashboards that I have created, for instance this one, I can see a dashboard that's created by click. So what I see in this dashboard is, first I see the actual figures that come from my ERP, but also I see the budgeted figures that come from CP. And what is important is that in order to have this kind of dashboard, we need to have the budgeted figures that were created with all the dimensions that we had in CP. So for instance, here we see the variance analysis, budget versus actual, and we see it by different cost centers for this database. So if I go and do a drill down for just production, here I can see the updated figures for the production. As well as that, I have here a table, and if I select anything else within this dashboard, for instance here on the map I select one region, I can see the figures for just for that region and for the production. Here I also have the products, so if I select one of these products, I can see the updated figures for just for that product. So in order to have a database like this, what we need is a software that plans the values on this level of detail. This was one example of the dashboard. The dashboards can of course be created in many ways, and this is just an example in one database how it was created. So I'll just finish the presentation by going back to the software, and I will show you the main screen when we open financial controlling, which is the whole process that we've been through. So at the beginning we set up the database, we did the import, we created the company, and we created the different structural units and grouped the companies within the whole group. After that we did the planning of the P&L, and everything that was planned in the P&L is automatically in the balance sheet. The whole financial planning process, the whole screen that we see right here, is the logic that's within the software. The software leads you through this planning process. So if you go step by step, what you have in the end is the planned balance sheet, planned P&L, and you have the cash flow statement as well, which are of course ready for the next step, for the variance analysis.